Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, August the 27th. My name is Eric Wilkinson. Yeah, you might recognize me as the Wolfman, but I'm here to teach you guys some different option strategies that you can implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, we've got that out of the way. Let's get it on with some economic data. We do have OPEC meetings going all day, so we'll have to see how that is going to affect crude oil. As of right now, we are pretty close to unchanged, so not seeing any marketable difference there. And not a whole lot to see over across the pond as in regards to economic data. But here in the United States, we got our Richmond Manufacturing Index. It was expected to be a -2 and came in at a +1. So good on that aspect. We've seen that reading come in negative, and these are going to be things that we see as how the economy is going to do. If the Richmond Fed manufacturing is good, that means we are producing and ramping things up a little bit, if you will. Maybe not ramping up so much in getting just a 1 in this number, but it was expected to be negative, so that coming in positive is a really good sign. Also, we got CB consumer confidence. That came in at 135.1, expected to be 129.3. Again, a really good reading. Anytime the consumer is feeling confident, that means they are more likely to spend those dollars in the economy. If they aren't confident, they're going to want to hold back and tighten up those purse strings and not necessarily spend. But when we're feeling free, that's when we're going to start seeing some of that velocity of money. And then we get a couple other economic data points coming out across the pond later today, but that is not released as of the time of this videotaping. Anyway, let's get on with crude oil. We can see that it is pretty much unchanged right there at the point of control, and I would expect it to stay there unless we see somebody really talking about cutting back on production. Then we could see a little bit of a pop going on there. I don't think that the OPEC is going to do that because I think that they realize we are in this flux of whether or not the economy is expanding or we're looking at a recession here. I don't think that they want to put a nail in the coffin and assure everybody of a recession, because then we can't afford to buy the oil to put in our cars and or into the production process with the distillates. That's going to be the main driver of plastic manufacturing. Excuse me. All right, so let's move over to gold. It's moving higher today by about $16. Yesterday it was looking like it was pretty toppy. I told you I was looking for a confirmation on the downside. We're not getting that right now. So I'm not going to be adding any gold to my portfolio on the short side. Bonds moving higher by about 1.5 points right now. Again, yesterday looking like we were making a bit of a topping pattern here, but bonds starting to move higher. A lot of these Fed governors are still talking as if we are going to continue this dovish mentality where we are going to maybe be lowering rates going forward. So bonds reacting that way. Again, the market in my eyes for the bonds is a little bit overdone, but again, I'm not going to step into those waters and try and swim upstream. All right, we got VIX moving higher by about 1 point because we're starting to see the equities come off right off the bat from the open. Overnight, it was looking pretty good. Talking about China coming back to the bargaining table with these tariffs. It's hit or miss as to who's actually reaching out to who on these tariffs. But at the end of the day, that's not really helping us out today with the markets down about 70 points. But we haven't gone anywhere, you guys. We are right there at the point of control. So despite the fact that we're seeing some equities come off today, we are still in and around the point of control, which is what we've been talking about for a very long time. You can see the NASDAQ off by about 15 points, but again, we're just migrating back down to that magnet. The NASDAQ will see the market want to pull back towards that point of control that we've talked so much about. And then E-mini S&Ps, again, down 10 points on the day, but we are still toggling in and around the point of control as long as we stay within these two Fibonacci's, the 23 and the 38, we are going to see the volume pick up in and around here and the time, creating even a stronger magnet there. Now let's break it down into the 30-minute candles here. Each gray section is the overnight. The blue section, as you can see in these other ones, is a full day session with the time and volume. Sorry, I got a tickle in my throat. But you can see overnight inventory got very long, and we talk about this. It's a tendency of the day session to really flush those guys out. We haven't been seeing that so much recently, but we see that today where the inventory got really long and the day session flushed them out. Now, are we going to get a bounce? I don't know. I think we are probably, now that those guys are flushed out. There's no real new data coming out other than the good data that I've already talked about. So I would expect a little bit of a momentum shift to the upside here. I was looking at adding some SPY bullish or long deltas, if you will, by selling puts in here. We've got high implied volatility. As you can see, it's well above my threshold for an indice for selling premium. But I'm waiting for more of a confirmation of that rounding off, and I'm going to be looking to add that to my portfolio today if I can get those positive signals. Now, 3M is something that I've added. You know, we are at this really low area. They've already had all the information kind of priced in here. We have no earnings coming up, but I have that high implied volatility percent. As a matter of fact, when I put this on, the implied volatility percent was just above that 50. It's still hanging out above there right now, so it meets those rules. And I went in and did the September, sold the 145 puts in there for $1. All right, so it's a little bit worse now. I got in a little bit earlier, thinking you know, timing's everything, but it doesn't really matter. I'm only looking at a couple of pennies. It might be trading around $1.05 or something like that. But at the end of the day, I think we may have found this little bottom here, and we're overextended. But we are starting to see some participation at these levels, which may very well drive us back up into the value area. There's a lot of different key volume nodes here. I wouldn't be surprised to see this shift in the paradigm down to this level, at least for the volume. As you can see, it's picking up, and the more volume that builds up down here will cause that whole paradigm to shift down a little bit. And price being accepted down here might lead one to believe that we could continue lower. I don't think that's the case here. I think that people are picking up and participating at these levels because it's a level that has been unseen in a very long time. So dollar cost averaging, everything is going to come into fruition here and drive this market higher, especially if we can get that move and the volatility coming out, then we will do well on that trade. Well, let's talk about Johnson & Johnson. It was just yesterday that we added this trade. And if you guys remember, I went into the September, sold the 119 puts in there, and sold those for about $1.50. Now, what happened? We had that volatility spike, and it was around a court ruling for Johnson & Johnson on the opioid epidemic. And it was ruled that they were a part of this pushing or being a pusher of drugs and these opioids driving, their bottom line balance sheet. Well, it came out that it was about a $500 million fine against them. Obviously, that was a little bit better than what was expected, and we got that pop higher for Johnson & Johnson on that result. So we've got the volatility coming out dramatically, and the correct move higher or our correct directional assumption, which also helped out dramatically as well. And if you guys remember, I went and sold those SEP 119 puts just yesterday, was able to buy those back for 29 cents today. So a nice big win on a one-day move, got that volatility crush coming out and the directional assumption. So that worked out well for us. And that's the beauty in being right, is that there's not you're in and out of those very quickly, not feeling like you're taking a whole lot of risk. But again, not a whole lot to talk about when you have all of the stars align correctly for you. You get the volatility crush and the directional move. That's exactly what we're looking for in a situation like this, because you can see we've gotten that move down on how many percentage points? Almost 12 percentage points. So almost, probably 60 cents of that winning trade came out in volatility and not just the directional move. That's why we need to set these up for according to my rules ahead of time, so that we can take advantage of all of those things coming together at once. And that worked out quite well for us. So those are the trades that I've done. I've not done anything else other than looking at that SPY trade that I'm going to be hopefully adding a little bit later. So check me out on Twitter at Wolfman's Blog. Also follow us on Facebook at Pro Trader Strategies, because that is where we are releasing a lot of these videos. You'll get access to them quicker. You're not going to have to keep checking your email. You'll just see it show up in your stream, and you'll be able to watch those almost immediately. So you have quicker access and accountability for that. All right? So that's all I got for you, other than if you can't take that, take it easy.